We are happy to see that post-elections we see both people that supported Trump, neutral people, and people that are were supporting Clinton, becoming more positive about the economic outlook, being willing to consider investments going forward. Now we need to see them translating that desire into reality. And not only in financial markets, also in the way those entrepreneurs invest in their own companies and their own businesses.
Sergio, you've said that it's not Brexit, it's not any of these things. It's the low interest rates in Europe caused by the tepid growth and no structural reforms. What you're seeing happen with the animal spirits in the United States might be possible in Europe if you do some of the same things. And I think that could be something that the continent could look at what's happening over there and say, maybe we can do some of this stuff over here. And then rates go up and you get a yield curve and everything else starts happening.
But what you guys have is a United States. Europe is not so united in the view it sees itself. And actually, 2017 will be a very challenging year for Europe. You see what's going on with Theresa May speech today, but also we have elections coming in Holland. Most likely, it's going to come out that a populist party will have a relative majority. You will see France elections, you will see German elections, Italian elections, and they all are pointing out to a lot of divide within the EU on how to tackle those issues.
I've got to tell you, these helicopters are so rude. Try to interrupt our interview this way.
Sergio, why don't we talk a little bit about the interest rates in Europe and how big of a challenge that is, with interest rates coming down and not rising like we're seeing in the United States at this point. What does that mean for you from a business perspective?
But I think if the collateral damage of low rates or negative rates would only affect banks, it would be okay, but it's starting to affect savings, the pension fund systems, insurance company, and the confidence of people who have been saving money, thinking that they can live a little bit out of their income to continue to prosper. And that is creating also this sense of inequality that goes on in Europe.